Hey everybody, it's good to be with you. This is the place to be, and I'm delighted to be part of it. Hey, we live and we're meeting today in really challenging times. The future hangs in the balance in many ways. Really consequential things are happening, including stablecoin and crypto regulation and rules for crypto wallets and financial privacy. And the outcome of this year's congressional agenda and presidential elections are going to have enormous impact on America's crypto innovation. And as if these developments are not complicated enough, they've now gotten political. Republicans and Democrats are taking sides. Now, perhaps that was probable in an election year, but it wasn't inevitable. In fact, crypto was not political back in 2017 when we greenlighted Bitcoin futures at the CFTC. Yeah, I know, we ran up against some TradFi industry opposition, including full-page ads in the Wall Street Journal saying that Bitcoin futures would basically cause the collapse of Western civilization. We had European regulatory complaints and even some Beltway press derision. But we didn't face political opposition. CFTC commissioners were characteristically unified in support of regulatory innovation. And it seemed natural that we would lead the world in crafting a groundbreaking regulatory regime for crypto. And we did, and we led the world. Today, CFTC-regulated crypto futures markets are a resounding success. Deep, liquid, transparent, and well-policed for fraud and manipulation. And that success is proof that US regulators can successfully regulate crypto if they're willing to do so. Yet, politics is politics, and politics abhors a vacuum. What one party gradually comes to disdain and demagogue, the other party will champion. So it is with crypto. What one side calls up an army to suppress, the other side gradually builds a campaign to advance. My friends, in addition to announcing that he's now good with it, crypto that is, former President Donald Trump may justifiably claim to be America's first crypto president. And that is because of the launch of regulated Bitcoin futures in the first year of his presidency. The enduring success of that regulated futures marketplace has helped ensure that the world's first digital commodity, Bitcoin, is priced in US dollars. Not euros, not yen, not yuan, but in dollars. Dollar pricing of the world's natural commodities is a key underpinning to the dollar's reserve currency status. And now, dollar pricing of the world's digital commodities will buttress the dollar's reserve currency status in the digital future to come. And that indeed is an important and enduring achievement. And yet I'm not here in DC to discuss things of the past or Washington politics of the present. I want to discuss with you the digital future. This audience clearly knows that our world is moving headlong into a new wave of the internet, an internet of value. In this new wave, indicia of ownership, basically who owns what and who transfers what to whom, is being recorded increasingly on global digital networks governed by unique new crypto digital protocols rather than on the isolated balance sheets of individual commercial and government institutions. This new wave brings the promise of greater financial access, inclusion, efficiency, and resilience. Yet, it also brings the risk of centralized surveillance, censorship, and control. And the question is, and the question I want to discuss with you is, will the future Internet of Value, and all of it, not just CBDCs, but stablecoins, decentralized crypto, the whole lot, will it be an internet that reflects the values of free and open societies? Or will it rob us of liberty in the same way that the second-generation internet centralized information and speech in the hands of a few big tech companies. Those are the matters I want to discuss with you, and in the next few minutes, call you to action. Today, decentralized cryptocurrencies such as Bitcoin and Ethereum continue to grow in notional value and computing power and distributed ownership. Despite random government attempts at suppression, spectacular price crashes, and really flamboyant frauds, Bitcoin recently surpassed the Swiss franc as the world's 13th largest currency. So clearly that's not going away. At the same time, US dollar stablecoins settled over $11 trillion in transactions in 2022. And that almost surpasses the payment volume of Visa. Stablecoin supply has grown from less than 3 billion 5 years ago to almost 140 billion as of January 2023, a year-old figure. Meanwhile, and to some degree in response to the growth of crypto and stablecoins, central bank digital currencies, CBDCs, continue to be deployed. Today, some 134 countries and currency unions, representing 98% of the world's GDP, are now exploring sovereign digital currency. 4 years ago, that number was only 35. And of these 134 countries, 68 are now in advanced stages of exploration, development, pilot, or launch, including 19 of the G20, and China placing its digital yuan, what it calls its ECNY, in over 260 million digital wallets, and the European Union planning to roll out its digital euro soon. Thus, it's clear CBDCs, stablecoins, and crypto will proliferate in the years and decades to come. And so the sometimes fashionable debate at conferences like this, choosing between CBDCs and stablecoins and crypto, is a false choice. The future is all of the above. It's going to be a coming kaleidoscope of overlapping and partially interoperable digital networks of value, some decentralized like Bitcoin, and others variously centralized and operated by global banks and big tech companies. And still others will be deployed by national governments and even exported for sale as CBDCs in a box for the developing world. Well, anticipating this trend, the Digital Dollar Project was launched 4 years ago. The project, co-founded with Daniel Gorfine, David Treat, and others, operates a neutral, nonprofit forum to consider how to modernize the US dollar while preserving its reserve currency status and the values that the dollar has traditionally represented in a coming world of digital currency networks. Today, under the executive leadership of Jennifer Lassiter, the project conducts pilot projects, hosts roundtables at leading universities focusing on privacy and other issues, publishes risk and privacy working papers, and brings together the public sectors and private sectors to consider global standards for CBDC privacy, risk, security, cross-border payments, and interoperability. What's important to note is that the Digital Dollar Project does not call for deployment of a US CBDC, at least and until key design elements of privacy, security, distribution, and economic stability are properly understood and democratically addressed. But the project does urge the US to assert principled leadership in CBDC experimentation at home and digital currency standard setting abroad. And here's the concern. Those centralized digital currencies that are emerging, both sovereign and non-sovereign, will be gathering points for massive amounts of data about the economic and financial activities of users, of citizens, and of voters. And many across the political spectrum are appropriately concerned about misuse of these enormous honeypots of private financial information, misuse by central governments, by banks, and by big tech. One can anticipate easily commercial and political pressure to conduct unlawful surveillance, gather information, report on private activity, and even disable financial transactions with disfavored groups and activities in a similar way to the widespread censorship of speech that we've learned about in the last few years that took place and takes place on social media by both government and big tech firms. And one can also envision government agencies using legal authority under pending stablecoin legislation to threaten the licenses of stablecoins used to pay for things that some government agency doesn't think citizens should have, however legal. Now, many of us place great hope in the promise of a new decentralized Web3 of free speech and personal commerce. But we've got to recognize the risk that Web3 will not live up to its promise if banks, tech companies, and governments fully monitor and control our everyday financial and economic choices. I mean, what is freedom after all in market economies such as ours, but how we choose to make a living, invest in the future, and support the people and the causes and the institutions we believe in? And so the question is, will Web3 turn out to force us to give up our privacy and autonomy in making those essential human choices? It better not. And that's why, regardless of the form of digital currency, sovereign or non-sovereign, CBDC or stablecoins, it's imperative that free society insist that the emergence of digital currency be consistent with constitutional freedoms and civil rights. In fact, individual economic privacy and censorship resistance should be affirmative design features and indeed competitive advantages of all digital value networks associated or tied to the US dollar. By encoding individual economic privacy into their very architecture, dollar-based CBDCs and stablecoins should serve as desired instruments for people the world over who aspire to financial autonomy and inclusion consistent with basic human rights. If we get the values right in digital currency, we will derive enormous economic value from this powerful new digital architecture. But if we do not, we will not. 30 years ago, the first wave of the internet rolled across the globe. It came out of Silicon Valley and like a giant tidal wave rolled across the world. Then, the US and other leading democratic societies made sure that that internet of information reflected the values of open and free societies rather than closed and repressive ones. In that remarkable turn of events, the public sector and the private sector worked together to set global internet standards and create the key governing institution of those standards, the Internet Society, ICANN, and others. Well, today a new wave of the internet is fast approaching. This time it's an internet of value. It's an opportunity, once again, for free people to work together to ensure that digital currency networks reflect the values and enduring virtues of financial freedom and economic liberty. But sadly, this time around, it's not happening in the same way. Not at least with any significant American official sector leadership. In just 3 decades, the lamp of liberty has dimmed. So here's my call to action. Here's my plea to you this morning. Let's work together as our enlightened predecessors did and ensure that the future of digital currency is one that enhances the free world. We did it before. We can do it again. Let's make crypto the spark that reignites fundamental values of human freedom. Let's set standards for global currencies, both sovereign and non-sovereign CBDCs and stablecoins that are worthy of human liberty and for people everywhere who aspire to that kind of liberty. And let's shape the future of finance, banking, and money itself in accordance with our finest and noblest human values. We can do it, Let's do it. Thank you all very much.